Well, when you sell your farm business assets, some of those transactions can get special tax treatment. From unharvested crops sold with the land to gains arising from the sale, it's important to know the potential tax benefits available to you. Well, Roger McEowen with the Washburn University School of Law joins us now to continue the conversation in today's Rural Money segment. And Roger, as always, thanks for your time here this afternoon. Now, before we dig in, can you give us a brief recap of the benefits of the Section 1231 property?
Sure, Janet. Good to be with you today. The big benefit on the tax side is that your net gains in the aggregate from the sale of what are 1231 assets are long-term capital gains. That means you get a very favorable tax rate on that. Presently, capital gain rates, long-term rates, could be 0, 15, or 20%, depending on combination of the taxpayer's taxable income and marital status. And on the loss side, your losses, if the net losses exist, then they're taxed at ordinary rates. So it's an ordinary loss on the downside, meaning fully deductible, and a nice rate on the upside.
Roger, how exactly does this work, of course, when it comes to our livestock producers? What are the highlights they need to keep in mind?
Well, a lot of livestock will count. So the first thing to keep in mind is that the definition of livestock for 1231 purposes is very broad. So just about any animal on the farm is going to count. We can even count chinchilla and mink, but we can't count bees for this purpose. So livestock is defined very broadly, and as long as you hold them long enough, you'll get 1231 treatment. And for cattle and horses, that's 24 months at least, and for all other livestock, you have to hold the animal for at least 12 months to get the favorable treatment on sale.
And then what about the unharvested crops sold with the land?
Well, if you have land that is sold with an unharvested crop, if both the land and the growing crops are used in the seller's trade or business of farming and then are sold to the same buyer in a single transaction, the land and the crops are considered to be property used in the trade or business. And so if the seller had held the land for more than a year before sale, 1231 treatment applies.
And Roger, of course, summarizing everything, what would you say is the biggest takeaway we need to keep in mind here?
Well, I think the big takeaway on this is 1231 is a very complex provision of the code. It's very beneficial, but again, this is one of these areas where a trained pro along your side can be very, very helpful in making sure you receive these tax benefits.
All right. Well, Roger, as always, thank you very much for your insight today. Roger McEowen, he's with the Washburn School of Law on the phone with us today. You can go online to washburnlaw.edu/WALTR for additional information.